Good morning. You are watching Daily Market Outlook live version for Monday, 13th of February 2012, prepared by Windsor Brokers. Highlights of the day: the most significant are that Greek lawmakers finally passed the austerity plan, while Athens burns in the protest of angry Greeks. Japan's big GDP drop, worry for the Prime Minister's tax plan. And the progress on the Greek deal affects markets as the latest news lift euro shares and the commodities. Finally, the Greece's parliament approved a deeply unpopular austerity bill on Monday to secure a second Eurozone IMF bailout and avoid national bankruptcy, as buildings across the central of Athens are in fire and violence spread around the country. Shops, cinemas, coffee shops, banks were set ablaze in central Athens, and black masked protesters fought riot police outside parliament before lawmakers voted on the package that demands deep pay, pension and job cuts. The price of €130 billion bailout needed to keep the country afloat. The state television in Greece reported the violence spread to the tourist islands of Corfu and Creta, the northern city of Thessaloniki, and towns in central Greece. Police said 150 shops were looted in the capital and 34 buildings set ablaze. Altogether, 199 of 300 lawmakers backed the bill, but 43 deputies from the two parties in the government of Prime Minister Lucas Papadimos, the Socialists and Conservatives, rebelled by voting against it. They were immediately expelled by their parties. As mentioned, some positive tone was seen overnight, especially on the euro and currencies and the stocks. However, the latest rally of euro and tonight's gap higher opening that we'll see on our technical part later on is still not enough, as the latest strong gains of euro were part of buy the rumor, sell the fact scenario that might show some signs of exhaustion of the single currency, as the finally long-awaited decision of the Greek Parliament have already been priced in the market. Currently, euro is trading around 132.60. Level much higher from the last Friday's low, when it dipped to 131.50. However, the upside is still capped, and the break above 90 days moving average is required to improve the current outlook. From the commodities, gold has ticked higher overnight after this release of the news, moving up from last Friday's 2 weeks low at 17.04, but still remains in the downtrend of latest high of 17.63 posted on 3rd of February. Similar with the crude oil, as it's still in the downtrend of 103.72 high of 5th of January, as the latest rally from 95.43 low of 2nd of February is still struggling to clear $100 per barrel barrier. British pound is slightly higher this morning after dipping and extending its short-term downtrend from 159.26, where the originally gains were capped by 200 days moving average. The dollar yen is still in the positive path, currently consolidating the recent gains, and expected that the focus is still higher, especially in the light that latest GDP data released from Japan during the night suggests that further weakening of Japanese currency would be the likely scenario in the short term. From today's calendar, very few events are due today, apart from the already released Japanese preliminary GDP quarterly that came at minus 0.6% compared to minus 0.3 forecasted, and the German wholesale price index monthly release that came much better than expected, 1.2% was today's release compared to 0.2% forecast, and no change of the previous week. That was one of the reasons for the further strength of euro this morning, overnight and this morning. Currently, we have a release of a Swiss PPI that was due at 8:15 GMT. We're going to take a look on the current release that came at minus 2 point, pardon, the Swiss producer. The monthly release came unchanged at 0%, while poll showed a 0.2% raise and compared to 0.3% of the previous month, while yearly reading shows minus 2.4% is today's release compared to minus 2.3% forecast and the previous release. And that's all from today's calendar. No more, as usually, Monday is day with the most thin calendars in the week. Now let's take a look on the markets and see the latest movements and the expectations for the day. As starting with the euro, we can see that euro has recovered a good part of the latest down move from 133.19 high of last Thursday, when the single currency dipped through some significant supports, finding ground at 131.53 last Friday. The latest bounce, along with the gap higher opening today, suggests further gains are likely, as the hourly studies are in the positive territory. The pair has so far tested 132.75, just ahead of initial barrier at 132.83-89 levels, above which opens figure barrier at 133.00 and our key resistance at 133.20, where is 90 days moving average that for now limits the upside and limits the latest short-term uptrend from 126.22. A break here to signal further resumption of the short-term uptrend and open figure resistance at 134 and Fibonacci level 50% at 134.25, retracement of the down leg from 142.46 end of October 2011 peak down to 126.22 mid-January low. On the downside, so far the downside remains protected at 132.20, 132.00 zone. This is the previous higher platform and range floor of the currency, and the low of today at 132 zone, where is also 220 days moving average. Break here would signal the first will cover the overnight's gap and the risk retest of last Friday's low at 131.53, where is also the main bull trend line, loss of which to further weaken the structure and look for test of the levels at 130.00 and 129.30, the next very significant support. Cable is in the short-term downtrend after hitting 159.26, where 200 days moving average seen on the daily chart limited the gains. Currently, the structure on the daily chart is still positive, as the 20 days moving average is currently attempting to break 90 days one that offers support at 156.90 zone. This is also the strong support zone, along with 157.30 level that was tested on Friday. This is the actually break point for the pair, as it continues to trend lower with the consecutive lower highs and lower lows defining the the near-term downtrend. A bounce of 157.30 so far seen corrective, as long as initial barrier at 158.20, the main bear trend line of 159.26 and high of last Friday at 158.20 stay intact, would signal further channeling lower and possible test of initial supports at 157.77 and today's low at 157.57, with loss of our key near-term support at 157.30, to open way for further extension lower for 157.05 low of 1st of February, and the next static support at 156.50, where loss of which would signal a temporary top at 159.26 and allow for a stronger reversal of the short-term downtrend from 233 to 159.26. Also, the next level at 156.50 is also 38.2 Fibonacci retracement of the short-term uptrend. On the upside, the clearance of previously mentioned levels 158 and 158.20 to provide near-term relief, and the signal basing attempt again at 157.30 for possible extension higher and test of 158.50 and 158.84 previous tops, above which to refocus 159 and 159.26, our recent peak. Break above 159.26 and the 200 days moving average is required to resume the short-term uptrend and open levels at 160 and 60.90 respectively. Dollar yen is currently posing, consolidating the recent gains, moving sideways in the narrow range between 77.50 and 77.80. That was the high of the recent rally from 76 base, and it marks also approximately 76.4 Fibonacci retracement of the latest down leg from 78.27 end of January peak down to 76.00 1st of February low, where the good support was found. The short-term outlook remains bullish and it favors the upside, although the overbought conditions on the 4-hour chart suggest further consolidation correction, with the dynamic support at 77.35, ahead of range support at 77.50, dynamic one at 77.35, 20 days moving average, and the 77.20, the previous high, expected to contain for potential dips and resume higher. Clearance of next strong barrier of 78.00, where is long-term bear trend line drawn of 2007 high at 124.14, and also the 200 days moving average required to refocus our next key barrier and the strong resistance at 78.27, previous November-December range ceiling, and the peak of 25th of January, where the gains were stalled and the subsequent reversal dipped down to 76.00. Dollar Swiss is again attempting and testing lower levels, the floor of the recent range after false break through the range low at 91.00 and the Fibonacci level at 90.75, as well as Ichimoku cloud base at 90, currently at 90.72. Bounced the price bounced higher only to test 92 barrier ahead of further weakness as the pair remains under pressure. Break of the recent consolidation range that was capped at 92.50-60 zone is to signal further extension lower, and the possible attempt again at our levels previously mentioned, 90.75 zone Fibonacci level and the Ichimoku cloud base, a break of which to open way for a more significant extension lower and test of 90.00 as a fixed support, and 89.55 next Fibonacci level, 61.8% retracement of October 85.66 low to January 95.93 high. Brief look at the commodities. The gold remains in the downtrend of latest peak at 1763 posted on 3rd of February, with the fresh 2 weeks low seen at 1704 on 10th of February. The recent positive news from Greece also boosted the yellow metal as the most popular safe haven instrument that is currently attacking at 20 days moving average at 1731. However, the gains need to clear minimum 1741, whereas currently the bear trend line of 1763 standing, with clearance of previous high at 1750 zone required to refocus 1763 and the possible extension up towards 1780 and 1800. Our next barriers, which is the key barrier in the short term, to break the current downtrend from 1920 of September 6 all-time high of gold, and to turn the focus higher. This would also confirm the double bottom at 1532, 1522. Failure to break above initial barrier at 1763 might signal further ranging. However, the daily outlook is still positive, as the 20 days moving average that currently supports the downside at 1710 crossed all three bigger moving averages, 255 and 90 days, and signaling a further extension higher. A loss of 1710, 1700 level would be risky and would signal further weakness of the gold price, with possible test of next significant level at 1660-50 zone. With the loss of also the 200 days moving average, with the loss of this level to definitely signal an end of the latest recovery and turn focus towards levels above 1500. The crude oil has also ticked higher off recent low at 95.43 on 2nd of February, and the last Friday's low at 97.40, currently attempting again towards 100, 116, our recent ceiling, a break of which, and the trend line at 101 required to resume the recent recovery, while break of 101.37, 101.26 previous peaks, and to refocus 102 and 102.20 next peaks of 19th and 18th of January 2012. On the downside, initial support lies on today's low at 99.07, where is also 20 days moving average at that zone, with loss of these levels to focus turn focus lower, and the 98 is the next support ahead of a key near-term support at 97.50, loss of which would turn the near short-term sentiment again negative. Good luck.